Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly supply and resistance area. In fact, from here, this previous move to the upside was created. After that, the market broke below the zone, and that is when that previous area of monthly support and demand was turned into monthly supply and resistance. And in fact, the area has already been respected as such multiple times every time that the market tested its zone. So we can see that every time that after the break, the market retested the area, it respected it as supply and resistance. And we can see how just last month we had another test of the zone and the market started rejecting the level to the downside. So in a situation like this, we could expect more potential bearish continuation away from this area. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market is currently breaking below previous weekly support from which all these moves to the upside were created, which now that the market is breaking it to the downside will be turned resistance. After that, what we could expect is a potential retest of this previous support and resistance, and then to see a potential move lower away from this area. Going down on the daily time frame, what do we have? Now, from a daily perspective, first of all, I did speak about NZDUSD a few days ago after the market had created this impulse to the downside. I explained all the reasons for which we could expect this correction, and then from here, more bearish continuation, which in fact is exactly what the market gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, if we go and check it out and check out what is going on when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the NZD, what we can see is that with the last reports, we have seen an increase of the net positions going from minus 3.6k net positions to plus 1.5k net positions. Now, this is a problem because it shows how institutions are actually currently starting to long NZDUSD. However, it is also important to keep in mind that at the same time, shorts are actually getting added. They're not getting closed. This means that the move to the upside could be just a short-term correction that institutions are interested in, and then inside of a resistance zone that we will now be looking to identify, actually a confluence of resistance area, institutions could start to close their longs and add more shorts since they are already adding shorts. That would further increase the probabilities of a potential move lower away from that confluence of resistance area. Now, which confluence of resistance am I speaking about? Well, here from a daily perspective, we can notice this impulse correction and impulse pattern to the downside. That created a low, which is this one here. From here, this is where the market printed the previous support that now that it has been broken to the downside is turned resistance here. So if the market will now go and retest this area, this is actually a previous support and resistance zone. Also, since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg. That shows us how we have the 50% and 0.618 Fibonacci retracements lining up exactly in this area that we could in fact expect this market to reject to the downside. So if the market will provide a correction to this zone, how we could be approaching a potential move lower. Now, as usual, Trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, what you can see is that at the moment, there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.